InvestorIdeas.com podcast.
Good afternoon and welcome to another episode of InvestorIdeas.com podcasts. In today's podcast, I'm going to be looking at a few public company announcements, mainly just looking at financial results that were released from most of these companies. So looking at 48 North Cannabis Corporation, trading on the TSX Venture as NRTH, HITI Incorporated, trading on the TSX Venture as HITI, and the OTCQB as HITIF. Also looking at Australis Capital Incorporated, trading on the CSE as AUSA, and the OTC as AUSAF. As well as CHOO Holdings Incorporated, trading on the CSE as CHOO and the OTCQB as CHOOF. Sundial Growers Incorporated, trading on the NASDAQ as SNDL. And lastly, looking at Canopy Growth Corporation, trading on the TSX as Weed and the NASDAQ as CGC. So first today, starting with 48 North Cannabis Corporation. I'm just going to be going through most of these financial results quite quickly. You can check out more details in the links attached in the article, or visit each of the company's websites, or go to cedar.com. There's also a few companies that obviously weren't included, as a lot of these companies released their financial results this week. So definitely something worth investigating afterwards. 48 North released its financial and operating results for the second quarter ended December 31st. The company's financial statements and related management, again, you can find on the website in cedar.com. A 346% year-over-year increase over the second quarter of 2020 revenues. Pretty standard financial results of what you've been seeing from most of these companies lately. Obviously, an increase in revenue, a decrease in debt, and a lot of them are starting to be a lot more efficient with how their companies are running. Looking at the management commentary, 48 North's Quarter 2 financial 2020 run results provide us with another strong demonstration that our strategy is working. The company was successful in driving an increase in revenue while dramatically decreasing its cash burn. And looking ahead, there are additional efficacies to leverage and significant organic growth opportunities to be capitalized upon, including increasing the reach of the company's newest brands, the Trail Mix and Latitude, introducing new product formats, and maximizing retail penetration, says Charles Vennett, CEO of 48 North. Now, as a brand-led, consumer-obsessed cannabis producer, 48 North has never lost sight of the big picture. And our strategy of putting consumers first, working hard in glove with wholesalers and retailers to commercialize our products, and investing in a leading supply chain that's flexible to an evolving market conditions has positioned us for continued success, continued Charles. So I'm just going to quickly move on and then sort of comment at the end. But HITI Incorporated as well also filed its year-end 2020 financial results. Again, very similar revenue results. So revenue increased by 118% in the fourth quarter of 2020 for the year ended. And similar, again, revenues, similar decrease of debt. Despite the global slump in retail sales associated with the pandemic, and thanks to tireless efforts of our team, we closed the year with approximately $8 million in adjusted EBITDA, making 2020 the best year in HITI's history, said Raj Grover, President and Chief Executive Officer. Now, we continued to run our operations tightly and in the year off with the recorded levels of revenue and adjusted EBITDA. And we're excited about our trajectory in the U.S. and continue to prioritize and look for opportunities in the market. Now, our integrated value chain, which includes cannabis bricks and mortar stores, e-commerce platforms for consumption, accessories, and hemp-derived CBD products, along with manufacturing and distribution of licensed and proprietary consumption accessories, experienced sizable growth on all fronts. We plan to continue to further strengthen our chain through organic growth and strategic acquisitions, creating even more value for our shareholders. Since the end of the fiscal year, we have already nearly doubled our size in Canada with the closing of the Meta Growth acquisition. And for the fiscal quarter of 2021, we expect to report revenue in the range of $37 million to $38 million, added Mr. Grover. So again, if you're looking at sort of the retail or a lot of these vertically integrated companies that have sort of assets in every sort of field of the cannabis industry, again, you're seeing a lot of consistency with what their financial results are. You're also seeing, again, the same sort of consistency I've talked about in the past when it comes to overall market trends, where you're seeing that, again, there's a big buy-up about the week prior to these financial results being released. Stock sort of peaking the day of, and then a pretty decent sell-off the next day. That's going to continue to happen for a lot of these cannabis companies. It isn't as staggering as it used to be, but it still is apparent. Next, looking at Australis Capital, who announced that the company has filed its financials and management discussion and analysts for the third quarter of fiscal 2021. They're also doing their actual discussion today It was earlier on, I believe, still going on, so definitely something to go and check out the recording of afterwards. On November 17th, though, of this year, an overwhelming majority of attending shareholders voted to support the new leadership team that was proposed by a group of concerned shareholders. So consequently, Dr. Duke Fu, Dr. Jason Dick, Mr. Avi Geller, Mr. Janos Capadio, and Mr. John Esterio were elected as directors of the company, and Dr. Duke Fu was also appointed as the interim CEO. So the period under review, which is the fiscal third quarter of 2021, relates to the period ended December 31st, 2020, and the results reported therefore relate predominantly to the legacy business and do not include any financials related to the proposed ALPS and Green Therapeutics acquisitions, which you can see in their previous press releases dated January 5th and February 9th. Dr. Duke Fu, interim CEO, commented, "We are delivering on promises made to our shareholders when the new leadership team took over, and we're executing at a very high pace with 2 proposed acquisitions announced and moving towards completion, a completely new leadership team installed, ALPS firing on all cylinders with over $5 million in contracts signed in the past 6 weeks, and the team is progressing on further potential partnership, transactions, and strategic revenue enhancing initiatives. Now, consequently, we are exceptionally well positioned to leverage our assets and execute on our unique expansion strategy to transform AUSA into a meaningful national MSO." Now, John Paul, the CFO, added that the company's third quarter results were impacted by a number of non-cash impairment charges against legacy assets and operations, as well as one-off charges related to the recent proxy battle and the resulting reorganization of the company's board of management. Now, without these extraordinary expenses, net loss would have been limited to $2.3 million, and the cash burn for operations during the quarter of $2.7 million was consistent with the first half of fiscal 2021. And as we wrap up the restructuring of the legacy operations, we have a cleaner slate of focusing on the ALPS, GT, and other potential acquisitions and partnerships as we scale our business. So obviously, Australis a little different than some of the other financial results I already talked about, and that primarily comes from those acquisitions as well as that large management change. Again, you can look at more details in the links attached in the article on the company's website or on SEDAR, but it goes into a little bit of how obviously their financial results not as bolstered as some of the other ones within the industry right now, and for just reason. As well, looking today at CHOO Holdings, who also announced and reported its financial and operating results for the second quarter of 2021. Again, increase of 350% over the second quarter of 2020, an increase of 30% from the first quarter, and again, very similar revenue results that you've seen from all those other companies coming off the busy quarter one summer season, traditionally the highest grossing period for cannabis retail. We were happy to see such strong results for the second quarter, says CHOO CEO Corey Gillen, and we continue to execute on our mission of providing the best retail cannabis experience across every market we serve. Lastly, for the financial results, Sundial Growers announced today that they will release its financial results for the full year and fourth quarter ended December 31st after the market closed on March 17th. And following that, they will host a conference call and webcast at 10:30 a.m. Eastern Time on March 18th. And again, that would definitely be one to pay attention to. Obviously, Sundial can have pretty aggressive results compared to maybe some of the other companies. And again, I would expect that stock to have a pretty decent week leading up to those financial results, as that usually tends to be the case. Lastly, today we're looking at Canopy Growth Corporation, who announced it's entered into the high-potential U.S. CBD beverage category with the launch of Quattro, which is a premium ready-to-drink CBD-infused sparkling water. Now, the stateside launch follows the successful 2020 rollout of Canopy Growth's CBD-infused beverages in Canada, where Quattro is now the top-selling ready-to-drink CBD beverage. Now, Quattro sparkling water contains 20 milligrams of premium U.S.-grown hemp-based CBD and one of 4 refreshing flavors, and with an MSRP of $3.99 per 12-ounce can, Quattro is a functional zero-sugar drink that delivers a natural, low-calorie beverage alternative at an accessible price point. We've proven our beverage strategy in Canada, where we are currently the market share leader in CBD-infused ready-to-drink beverages, said Canopy Growth President, Chief Product Officer Rafe Kovacevic. And beverages are fueling growth in the CBD category, and we believe that this product will resonate with U.S. consumers looking for a naturally flavored zero-sugar option. Now, the launch of Quattro in America coincides with the astrological event known as the Age of Aquarius, the Zodiac's water bearer, which brings us to the cusp of a brand new age. And to celebrate this serendipitous event, Quattro has partnered with iconic celebrity astrologist Susan Miller of Astrology Zone on a digital and social campaign. Astrology has made a major pop culture comeback as people turn to the stars for guidance during what has been an unsettling, uncertain, and stressful time for many, said Cannabis Growth Vice President of Beverages, Tara Razalovsky. Now, with the campaign, we're highlighting the role functional ingredients like CBD can play in helping people manage their stress, find moments of calm, and prioritize wellness during this once-in-a-lifetime transitional period. Now, this also follows the recent news from Seth Rogen's brand Houseplant, which is part of the Cannabis Growth portfolio, which will be coming to California in the next week. And shortly even after he tweeted this and delivered this news, Houseplant's website was overwhelmed and crashed, showing obviously how excited and the momentum surrounding that. So Cannabis Growth obviously now making a lot more aggressive steps into the U.S. market. They'll be continuing to do that throughout each month. I really like that they're now starting to have an edge within the CBD space, and I do think that this is a potential advantage for Canadian companies when you're looking at the US CBD market, is again the products that they're going to be bringing to that industry are going to be more in line with what's had to be launched within a more regulated market in Canada, and therefore it's going to be a lot easier to launch into US markets, as again the packaging and overall format restrictions, especially surrounding beverages, are a lot more lenient when you're looking at the U.S. markets, especially with regards to CBD, whereas in the Canadian market, it's still highly regulated, quite strict. So if you can get those products out to market, if they are successful, it's pretty easy then to adjust things to each state that you're going to be launching into. And again, I do think that the quality level of some of the CBD products from more regulated markets, not just Canada, but other parts of the world as well, when you're looking at medical markets, and for instance, have been proving to be the better products than some of the stuff being pumped into the U.S. The only downside with the U.S. market right now for CBD is that, again, it's pretty oversaturated with lots of different quality levels of CBD products. You're seeing a lot of very, very shitty CBD products and beverages, etc., that go out to the market that do not have the percentages of CBD that they're advertising, that do also have heavy metals, particulates, etc. And a lot of them also are using CBD isolate, which is not as effective as, for instance, partial or full spectrum CBD based off of an actual hemp plant. And again, from these more regulated markets, they are using those types of products. They are focusing on full spectrum. And I do think that that's going to be the winner over the long term when you're looking at this CBD market. I think that there will be obviously some market for just kind of shoving CBD isolate into everything, which does seem to be a trend that will continue for quite some time. But it'll be interesting to see how, again, now that we're starting to see Canadian companies that have launched products in Canada and been maybe a little bit more established, now entering into the U.S. markets. Interesting to see how that competition will turn out and what sort of advantages or disadvantages they will face in those U.S. markets, and if it will be successful. I'm pretty confident in Cannabis Growth's line of Quattro products, and again, I know they'll be successful with Seth Rogen's brand, obviously in California. But it's going to be interesting to see how this progression of Canadian large producers entering into the U.S. markets pans out over the next year, and if U.S. regulations are able to, I guess, keep up to a certain pace to allow for these U.S. businesses to expand at the same rate so they aren't just bought up and dominated by larger Canadian companies. That's all for today's podcast. Enjoy the rest of your Tuesday. That's all for today's podcast. Podcast is now a certified word trademark on the blockchain through Cognate Incorporated CM certification. InvestorIdeas.com podcasts are also available on iTunes, Spotify, Google Play Music, Stitcher, iHeartRadio, Spreaker, and TuneIn. If you'd like to be a guest or sponsor of this podcast, please contact InvestorIdeas.com. Investor Ideas reminds all listeners to read our disclaimers and disclosures on the InvestorIdeas.com website, and this podcast is not an endorsement to buy products or services or securities. Investors are reminded that all investments involve risk and possible loss of investment. Investor Ideas does not condone the use of cannabis except where permissible by law. Our site does not possess, distribute, or sell cannabis products.